One of the things we like to talk about in our coverage universe is that the internet is not really a space by traditional coverage standards. It's more of every space. So we essentially have to cover almost every consumer vertical that the internet is finding its way into, which is basically everything. And so when you think about how to be useful and value add within those stocks, you really have to develop deep domain expertise in those verticals. If you're following restaurant delivery, for instance, yes, there are internet businesses that are addressing that segment, but you really have to know the restaurant business before you can understand how the internet can disintermediate that. So that's why we spend a lot of time doing deep vertical work in a lot of these various end markets. So we've reached a really interesting moment, I think, for offline businesses facing the obvious existential crisis as online adoption continues, particularly around e-commerce. I think what's interesting, even at this moment where the challenges that offline businesses face have accelerated in light of COVID, is that every young company, every startup in technology that is pursuing some type of consumer end market has virtually unlimited access to capital. And so what that means is they can go out and spend on advertising at a rate that most offline businesses can't. And so I think that has further exacerbated the challenges that those businesses are facing here as we move forward. One of the interesting things I think we've observed, particularly out of the large internet players, is that they're all trying to build their own sort of platform argument. What's interesting is that in developed markets, the US and Europe primarily, internet users and smartphone users have really demonstrated a usage pattern that suggests we like to use a lot of different kinds of apps, and we're not so willing to sort of bundle a bunch of services inside of one app. In Asia, potentially because a lot of Asians were introduced to the internet through the smartphone, they've exhibited a much greater comfort as being able to bundle those services, which is, of course, the WeChat app. And I think one of the arguments that Facebook and Google and Amazon and others are trying to put together from a platform perspective, Uber as well, is they want to try and add to their core business by bringing other pieces of that consumer spending inside of the app. And so I think this is a theme you'll see going forward, is a lot of these larger internet companies trying to build that platform thesis. So given all the value creation we've seen just in the last few years from the largest stocks like Facebook, Amazon, Netflix, and Google, for example, one of the questions we get from investors a lot is, are there investable stocks in smaller companies, small and mid-cap type companies within the internet? We think so. One of the limiting factors for the large players being able to go down and grab more value from these verticals is access to supply. If they can't get the information around what the supply side of the marketplace looks like, they're not going to be able to sell that very well to their consumer. Two examples that come to mind are real estate and car retail, where you've already got several very entrenched vertical specific players that are operating in those markets. Makes it really difficult, I think, if you're a larger company, to come down and grab that information.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives. For disclosures, please visit www.rbccm.com/disclosure.